Okay, welcome back. We've been talking about stocks and equities all day, but let's talk about commodities now. And of course, gold is glittering once again, bouncing off very, very sharply over the last 2 days. Manisha, take it away.
Oh, well, absolutely. You know, there are various concerns in the international markets right now. And even as the equity markets have gained today, gold is not left behind. We're looking at all-time highs coming in and continuing for the gold prices. $3,200 an ounce is a level that we've been talking about for a very long time in this year as an year-end target. But there you have it. 32.20 is what we've seen in the Asian markets, in the markets today itself. So with this, gold is on track on best weekly gains since November 2024. And we also have seen gold prices hit all-time highs, not just in the US dollar terms, but in the Indian rupees, where we are trading above 92,000 rupees. Gold is also trading at an all-time high in Japanese yen, Australian dollar, Euro, Chinese yuan, all of those currencies as well. Very strong gains continuing, and that's also on the back of the US dollar index, which is trading at a 3-year lows. That clearly has been supportive for the gold buying there. The markets also are looking at strong ETF investments globally. Those numbers have continuously seen inflows for the last couple of quarters, and April has started no different, and that has been supportive. Well, the markets are looking at escalating US and China trade tensions, with various tariff missiles being thrown on both the countries, and that has been bothering. Tariffs on China is now 145%, and China tariffs on US now stand at 84%. There have been various calculations from various sectors on what it would really mean in sense of businesses between US and China, where the costs have gone up really high. So the inflation concerns has been one of the reasons that we've seen gold prices continue to do quite well there. Well, there are bullish cues coming in from the US markets itself. The US March CPI data that came in yesterday has been on the lower side, pushing for a rate cut as early as for the month of June itself. And then it also has been about the high US national debt. $34 trillion is what we saw passing in the month of November itself as an all-time high, and it only has grown since then. That has been supportive. The markets also are looking at COMEX gold holdings, which are also near record highs. The markets have been buying ahead for eventuality like this one. So strong buying continuing on physical markets and investment buying as well. The next chart should tell you on what the global banks and brokerages now believe that the gold prices can go up to. Well, 3,000 almost done, 3,015 also done. Deutsche Bank has talked about 3,140. And in extreme scenarios, they've talked about 3,700 on the higher side as well. That's going to be a level to watch out for. 3,200, again, we are standing at those levels as being put by ANZ and UBS. Remember, these banks had put these targets for the second quarter or the second half of this year. We already have seen that happen. Now the higher targets, Goldman Sachs has talked about 3,300 and 3,350 is what Bank of America is talking about. Citi says if investment continues stronger and there are extreme chances, you could be looking at 3,500 into this year as well. De Beer has talked about 3,300 and an eventuality can take the prices to 4,500 on the higher side. And this, the last one, is the most bullish of all until now. This comes in from Swiss Asia, where they say they're anticipating gold prices to continue to gain in the next 2 to 3 and 4 and 5 years as well. They have a gold target of $8,000 an ounce until 2028. Well, so everywhere that you look, we have banks revising their gold targets on the higher side, and it continues to be very, very bullish.
You know, Manisha, $8,000, we're at 3,000, right? 3,000 to 8,000 in 3 years.
Yes.
That is almost a 40% CAGR return, 40% compounded.
And if you look at the last 1 year, it's gained up by 40%, Prashant. So we've seen gold prices gain up by 40% in 1 year. This is about 3 years of a target. So,
and, you know, we'll see. But it is absolutely the go-to in that sense, a safe haven and so many other reasons why gold's been doing well.